Hi, in this video, I'm going to share 5 specific stocks that are part of my stock investing watch list. These are companies I'm excited about and interested in, but I haven't started investing in yet. I try to keep my watch list pretty short because having a list of 500 different companies to watch is not really helpful. So ultimately, this is a short list of companies that I think are great prospects for future potential companies to add to my portfolio. They might be the next ones that I choose to invest in. In some cases, these are companies that I've heard other people or YouTubers talk about. In other cases, I may have read something about them or seen something about them, and I've decided I'm interested in them. In many cases, these are actually companies that I already own. So you'll see that in the 5 that I talk about today, some of them I've owned before. And so a lot of times, if I choose to sell out of a company because it's become overpriced or some other situation that I think is going to be temporary, a lot of times I'll put that back on my watch list because I'll be happy to invest in it again in the future. Today I've chosen these 5 stocks because I think they offer a variety of ideas out there for the retail investor. You know, a lot of times we focus on particular stocks that get a lot of attention, a lot of hype, and become very popular. But there are a lot of different companies out there to think about. And if you're going to run a portfolio with only 10, 15, maybe 20 different stocks, you shouldn't have them all focused in the same area, the same kind of company. It does no good to say I own a portfolio of 10, 15, 20 different stocks when half of them are all big tech companies, or you own all the different streaming companies, or half of them are all restaurant chains. You know, that's not diversifying at all. So these 5 companies represent different sizes, different industries, and different risk profiles. So my hope is that out of these 5 companies, at least one of them will be interesting to you and something that you haven't thought about before, and do some research further. Okay, now before we start, one of the things that I'm going to mention with each of these is a hurdle or something to get over, something to wrestle with is valuation. And so I'm going to mention the PE ratio in each case. So the PE ratio is the price to earnings ratio, and that's just a very simple metric that you can find about any stock on any brokerage. And my idea in referencing that here, it's not the most important thing to me, but it's an easy standard to measure these stocks against each other and against the other stocks in your portfolio. And so it's helpful to know that the average PE ratio of the companies in the S&P 500 today is just under 21. So 21 is about average. And you're going to hear that in each of these 5 stocks, they're higher than that average. The question is, are they worth it? And along those same lines, remember, this is my watch list. These aren't stocks that are actually in my main portfolio at this point. If they were a screaming buy, I would have already bought them. So it makes sense that when I talk about them, at least, I'm kind of on the fence and I'm struggling with them. All right, without further ado, here's the first company is Costco, ticker COST. Costco is a $207 billion market cap company. That's a good size, and they are a retail chain of stores. Costco is a stock that I've never owned until very recently, and I've just begun by adding it to my smaller account, my Roth IRA account, but I haven't decided if I want to add it to my main account yet. But I'm tempted. I haven't ever owned it because it always seems to be priced so highly compared to other retailers. I understand that it's different than other retailers because it has a membership subscription model, which is great, but it's still retail and it's hard for me to know exactly how to compare it to others and decide if it's really worth the price that I have to pay for it. But in just comparing Costco to itself, it's come down a lot in price, and I'm considering investing in it. At a PE of 37, it's still more than I want to pay. But if I'm ever going to own Costco, this may be the best price I see for a while. So if you're a follower of Joseph Carlson, I know you've heard him talk all about Costco, but he's probably the only YouTuber I've ever heard talk about Costco. So I'm hoping some of you may have never considered it before, and it's an interesting idea to you. All right, up next we have Trex, ticker symbol just like the name, TREX. This is a $7 billion company, so much smaller than Costco, and it's in the materials industry. So Trex is a company that manufactures wood alternative products. So think fake wood decking and furniture and that kind of thing. This is a company I bought in the middle of the pandemic, following a trend and a social arbitrage opportunity that the Dumb Money guys identified in one of their videos. So if you follow the Dumb Money crew, Chris Camillo, Dave Hansen, Jordan McLean, they talked about this in one of their videos when lumber costs were going through the roof. Trex sales and demand was higher than ever, and this is a company that has tremendous growth. While I sold out of Trex a while ago, I was actually reviewing their fundamentals, and this is a company I really like. I know many investors don't really like companies that have one main product, but that doesn't bother me when you're an absolute killer on that one product, and especially if that product is something that would be very difficult for other companies to come in and compete with you on. And I believe that's the case for Trex. I love the numbers on Trex, and I could see myself buying it very soon as more of a long-term investment instead of just a social arb trade. While the price has come down considerably, it still trades at a PE ratio of 32, which is high, but considering its track record of high growth, it's got me on the fence. All right, up next, number 3, Airbnb, ticker symbol ABNB. This is a $78 billion travel company. So if you're not familiar with it, you must not watch their commercials. Airbnb is a platform that you can log into as a consumer and find people who want to rent out their properties to you. So Airbnb manages the whole platform and the relationship, the communication between the renters and the landlords, who are called hosts on Airbnb. This is another company that I've owned in the past. I was able to ride it for a while when it looked like we were all going to come out of the pandemic together and society was going to go from complete lockdown to complete reopening all at once. But when it turned out that that wasn't going to be the case, I realized that Airbnb would stop shooting to the moon, and so I gradually sold off. Now it has fallen with the rest of the market, and I have it on my watch list. This spring, I took my family to the beach and we tried an Airbnb, and it was a great experience, and so I'll be happy to use this service as a customer in the future. I would like to think that they're going to have an amazing summer season and have blowout numbers, but I think with everyone being concerned with recession, people may not spend as much on travel. And I think people across the country have all had different reopening kind of experiences scattered throughout the year, and this makes it difficult to really know what to expect as far as the seasonality that we would normally see in travel. If people went on a bigger cruise or vacation earlier this year, maybe they don't have as much time or as much money to spend on a big trip this summer and stay at a big, nice Airbnb. Trading at a PE ratio of 92, I don't know if anyone really considers it a bargain, but at least it's not in the category of stocks that you would say are unprofitable. They are making money, but they are reinvesting a lot into the business and to trying to grow the business. And at this point, you're paying a pretty high price for those earnings. All right, number 4 on our list is a company I'm sure you'll have heard of, if not been a customer of, and that is Domino's Pizza, ticker symbol DPZ. Domino's is a $14 billion company, and it's a restaurant chain. This is a stock that I've never owned, and I wish I would have gotten involved in this stock before the pandemic, because wow, did it go on a run. I like this company, and I think they offer an incredible value on the lower priced end as a pizza restaurant, and I would like to invest, but I think it's still a little overpriced for me to justify investing. My other concern is I'm not sure, and I haven't really done the research to figure this out, but with a recession looming, how would it affect Domino's sales? I can see a case for saying that it would hurt their sales because people would have less discretionary spending purchases for convenience like ordering takeout, but I could also make a case that they would actually benefit from this because they are on the cheaper end of the spectrum. So personally, I could picture customers who would be in the habit of usually ordering higher priced options to consider switching over to ordering more from a chain like Domino's. So while it's on my watch list, I have concerns. I haven't started investing it yet, and I'm undecided. Trading at a PE ratio of 29, at least compared to some of the other stocks we've talked about, it seems like a much lower price, but it's still a very high price. And when I'm able to look around the market and see other deals on stocks that I already invest in or have invested in the past, it's just hard to say I'm going to invest at a PE ratio of 29 in Domino's. All right, and finally, stock number 5 is NVIDIA, ticker symbol NVDA. This is the largest of these companies. It's a $466 billion market cap, and it's in the electronics and semiconductor space. This is another company that I've owned in the past and I like, but I don't like it so much that I'm not willing to sell it when the prices go through the roof. Also, at one point, I found myself owning both NVIDIA and TSMC, that is the Taiwan semiconductor company, and I try not to get into too many situations where I own 2 or more competitors. But at this point, I've sold out of both of those, and I don't own any semiconductor companies, and I wouldn't mind getting back in at some point. NVIDIA is a really solid company that has a history of growth, and I'm sure they'll do well in the future. Again, I simply haven't decided if I'm ready to start buying. It often trades at a very high PE ratio. Right now, it's trading at 50. Which even for a company of this caliber is very high. I hope that this handful of stocks has been interesting to you, and talking through in just a very brief way maybe has piqued your interest or exposed you to a stock or a company that you wouldn't otherwise have thought about. Now, just because some of these may sound interesting doesn't mean to go start buying them. Remember, this is the time where you dig in and you start learning about the company yourself. Maybe add them to your watch list. I want to take a moment on this video and say if you've subscribed to my channel, I really appreciate it. It's been an interesting journey. I've been making these videos for about 3 months now, and I have just under 100 subscribers, and that sounds really small compared to so many channels out there. But I want you to know that I really appreciate you and I value your time. And I'm making every effort to improve as a content creator with each video every week. And I just want to share my experiences with you. I will go ahead and mention I'm going to do something a little different for my 100 subscriber video, and so I want you to be looking forward to that. I think you'll appreciate it. It's not anything huge and crazy, but I think you'll enjoy what I have in store. Well, that's it for this video. So until next time, have a great day.